Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are likely to start with a positive bias amidst gains in global pairs. Talk about Gift Nifty is ending at a positive chart coming in for the last read. Stock features are little changed after S&P 500 registers longest winning streak since 2021. Asian shares at this point of time are muted as rate hike fears re-emerge. China uncertainty weighs too. FIIs have sold in shares worth around 497 crore and DIIs have bought shares around 700 odd crore. What we have in terms of the FNO space and the FII trend, they've been net buyers in index futures and index options. Along with that, they've also been buyers in stock futures. The places where they've also been a buyer is Bank Nifty option. Perhaps the only place where they've been selling off is Bank Nifty futures. So to keep an eye out on that one. In terms of band, GNFC still remains in the band. Option Qs 1.07 compares to that of 1.14. Earnings that you need to watch out for will include Lupin, Tata Power, Oil India, 63 Moons Technology, Bata India, PHEL, CESC, Moscow Dock, MCX, and MTR Technologies along with Nazara Technologies. Along with that, United Spirit too will be reporting in the September quarter earnings. But let's discuss trade setup for the day along with some of the stock recommendations with Rajesh Palviya from Axis. Morning there. How are you doing, Rajesh? Good to have you with us.
Good morning, Nickey.
All right, Rajesh, straight up, what's your assessment on the initial trade setup? Just a minute there from towards the open, your strategy on Nifty and Bank Nifty.
So trade setup is looking on the bullish side only. We have seen in the previous session also both indices have recovered from their lows, and the kind of short covering was there in Bank Nifty is clearly indicating that we can see further more traction on the buying side for Bank Nifty, and Nifty is likely to move further higher towards 19,500, 550. One can initiate the buying of 19,400 call option at this moment to play this upward momentum for target of 125 to 130. So that's the call on the Nifty. Both indices are looking bullish. Buy on dip should be your strategy at this moment.
All right, buy on dips is the strategy, but perhaps we'll have to wait for that. We are looking at a flat start with positive bias, well, in line with what the anticipation was. Nifty 50 right now is about that 19,400 mark, but whether or not it can inch closer to the 19,500 level through the course of the session remains to be seen. Talk about Bank Nifty. Let's pull that up and just to see if we're seeing some amount of strength also for that. No, it is a flat start, but with positive bias. Remains to be seen how Bank Nifty actually fares through the day and perhaps could also drag down the indices lower, if not anymore. Let's also talk about mid-cap and the small-cap index. Well, we are looking at gains to an extent of 0.6% thereabouts for mid-cap. And for small-cap index too, we're looking at gains to an extent of more than 0.5%. In terms of sectoral indices that we have, IT index is doing well, gains to an extent of 0.1%. And other sectoral indices like PSU and the metal index essentially, that is the one that we need to watch out for. Well, metal index, Hindalco and Novelis essentially comes with the numbers and the entire basket is doing well. Let's also pull up PSU Bank Index just to see how is that faring amidst the lackluster momentum or sentiment that's prevailing in the markets right now. It is an outperformance coming in from that one. Look at the gains to an extent of more than 0.5%. Top gainers and the top losers just to see where the momentum is. Well, if you look at the top gainers, we have BPCL, Adani Ports and Adani Enterprises as some of the top gainers, and UPL, NTPC and Hero MotoCorp. These are the other gainers that we have on the list along with Coal India, Tata Motors and JSW Steel. Let's talk about also the top losers, right? Hindalco is the one which is the top loser of the day. ICICI Bank, Bajaj Auto. These are some of the other losers along with Nestle India, HDFC Bank and Infosys. Now, Novelis has come out with good set of numbers and guidance is also achieved in higher, or let's just say ahead of what the anticipation was. Some amount of profit booking probably has crept in Hindalco, which has otherwise been doing well. Looks like the good news is already, or let's just say the results have already been factored into the counter. Also, let's get back to Rajesh and check with him what does he make out of it. the start that we've seen apparently, and also the index stocks which have been doing well, something like BSE, MCX, and stuff like that. Rajesh?
So it's a good start for the market as Nifty is holding 19,400 and Bank Nifty is holding above 43,700. So I think buying traction will pick up in due course. Stock specific action is very encouraging. The sector that is showing good traction after opening, that is metal space. And from metal space, we are bullish on Vedanta. One can buy this stock. As we look at the near-term setup, stock has formed a base at around 220 kind of zone, and again there is a breakout on the near-term consolidation range. So we believe that Vedanta can be a stock where one can look at to buy at the current level. We are projecting target of 248 to 250 with stop loss of 232. And the second stock is from PSU Bank, that is PNB is looking very promising. Overall structure is bullish. After a brief correction, now stock is showing good traction. Even in the previous session, a lot of buying action was there in PSU Bank. So PNB is looking attractive. 82 is the immediate target where we are projecting, and one can buy with stop loss of 73. And the third stock that we like at current juncture from oil and gas sector, that is GAIL, is looking very promising. After a corrective move, stock has taken the support from its 100-day moving average, and now since last couple of trading session, there is a buying traction. 132, 134 is the immediate target where we are expecting, and one can buy GAIL also with stop loss of 121. So these three stocks are looking promising. And on the index, 19,400 call option where we are focusing for the day. With stop loss of 35 and upside target for 19,400 call option, we are projecting around 120 to 125.
All right, Rajesh, we're just going to leave it at that. And thank you for giving those recommendations to us in the morning. All right, let's navigate our conversation to stocks and news. Of course, we're going to quickly also talk about the fundamentals. Shree Cement overall has reported a good set of numbers, better than what the street was estimating. Stocks and news revenue for Shree Cement up by 21%. EBITDA has also shot up by 66% for this one. The stock really isn't doing too well at this point of time. 19% margins compares to that of the 13.85 year on year. The net profitability of the company also has increased to 491 crore as compared to 190 crore in the corresponding quarter of the previous year. Let's talk about Dilip Buildcon, where the numbers reported have rather looked like a lackluster set of numbers, disappointing set of numbers. 2.5% cut thereabout for the counter. Revenue up by 9.7%. EBITDA is down by as much as 3.2%. The margins have shrunk at 12% versus 13.6%, and the net profitability has come in at 68.6 crore as compared to 17 crore in the corresponding quarter. IRCTC, well, another interesting one which has come out with the reports and the numbers. Let's pull that up just to see how the stock is doing. IRCTC Q2 numbers, revenue is up by 23.5%. The EBITDA is up as much as 20.2%. Margins have also, to an extent, on account of that faster revenue growth, margins perhaps squeezed in a little bit. Net profitability is up by 30%, and the internet ticket revenue is flat almost for the quarter gone by. The stock isn't really doing too well in trade, and a flat trend notice for IRCTC, a bit of, let's just say, dull. The stock is down and out, let's just say, by 0.75%. Apollo Tyres, another one that you need to keep an eye out on. Apart from that, it's a good set of numbers overall. There's a strong growth for Apollo Tyres. Asia Pacific and Middle East region essentially have done well. Revenue is up by 4.4% for that region. EBIT is up by 3.2% within the region. So clearly, Apollo Tyres is the stock of the day. And the European region, however, if you look at the split for Apollo Tyres, it's in low single digit. The revenue is up by 3%, and the EBIT has also been flattish for this one. So Apollo Tyres along with Hindalco, these are the two that you need to watch out for. Novelis, which is reported in the numbers, adjusted EBITDA per ton is almost flat, and the EBITDA is down by 4% for Hindalco. It was one of the top losers that we have. Early deals. The volumes, however, has improved in sequentially. EBITDA per ton is back at $500 per ton, which is way sooner than what the guidance was for the quarter gone by. The commentary is positive on the outlook from Q4 FY24 onwards. Destocking in cans largely can be now put behind for this one. So clearly, these are some of the encouraging numbers that we're looking at. Barring Apollo Tyres, most of the numbers actually, rather I stand corrected, are disappointing numbers. But let's now navigate our discussion to the fundamental side of the story. Anirudh Garg, the partner and head of research at Invasset PMS, essentially joins us early this morning. Invasset PMS, I beg your pardon on that one and apologies. Anirudh, good morning there. And I'm going to start off with your initial assessment of what do you make out, what has really stood out for you in the quarter gone by, the earnings that have stood out for you, sprung in a positive surprise, a bit of disappointment which is crept in from the IT name. FMCG basket too wasn't that encouraging. Banking sector led to some disappointment. What are you really picking up?
A very good morning, Nickey. Thank you for having me. I think you've answered it all. So when it comes to the earnings this season, we were very, very clear on what's happening in the market. One needs to take a view of what the next 2 to 3 years would be at. We at Invasset believe in something called a two-run theory, where we believe that currently we are in an old economy run, and which is further characterized by high growth, high capex, high money supply, higher inflation, and all these parameters tend to be higher. So we were very, very clear that the results this time would more be favorable on the old economy sectors, and that is what we have seen. When it comes to decoding the sectors, we believe that the domestic capex is at the helm of everything. Government going into an election year with 19.5% plus budgetary expenditures towards capex is, I think, unseen. The intention is very, very clear. This is the pocket where the results were expected and has delivered. So we are bullish on sectors which have delivered good results like capital goods, defense, railways, power, infra. We believe that these are the sectors that will lead the run further. When it comes to financials, as ever, they have delivered wonderful results. Our theory for financials was that public sector banks have undergone a major transformation in the past 5 years with the NCLT laws and the IBC laws coming in. The public sector banks were at the helm. Also, the books were cleaned up and the asset quality had improved. So we were very, very bullish on the public sector banks, and that is what we have been owning for the past 1.5 years. Also, the private sector banks, we predicted that they would undergo a time correction or a price correction. Yes, they have undergone a significant time correction. The results have been great, and I think now private sector banks for us are in an investable zone. We are bullish on the private sector banks also from here, but more bullish on the public sector banks. When it comes to consumption, there is a very, very interesting scene that we are seeing in this journey from $2 to $10 trillion that India is going through. The lower level of the strata, the lower consumption is the numbers are not that good. The HUL and all the numbers are not good, but we have seen significant improvement in the top line and the bottom line in what we call the premiumization sectors. We have seen good results for Tata Motors. We have seen good results for DLF, amazing results for Ethos and companies like that. So yes, premiumization is something that is picking up in the consumption space. When it comes to pharma, I think the shallow cycle that the pharma goes through is now over, and all the concerns, whether it be US FDA or the pricing pressures in the US, are clearly reflecting are moving away. Though we are more bullish on the domestic pharma and domestic consumption in terms of pharma. And yeah, this is how we analyze the results, and bullish on what sectors we told you, capex
All right,
and capex related.
Let's chat. Apparently, you've covered in a lot of ground and preempted some of my questions already, so I'm left with very few in that case. So I'm just going to squeeze in one more for you in that case. Talk about how you're playing the markets ahead of Diwali, ahead of what themes essentially you think will probably the theme for somewhat 2080, and will large caps make come back in a big way as compared to the broader counterparts, or you think the outperformance from the later will continue? Your assessment?
Okay, so our assessment, Nickey, is that how we see it is that currently this in an old economy run, the market hunts for value. And when you're looking for value, mid and small cap is the place that you have to look for. This is the, I would say, the broad space where you'll find these companies. And large caps for us, yes, they are in a comfort zone when it comes on an index level. But on a stock picking level, if you have to invest in the high growth industries in India, you have to go in for the mid and small caps. And we firmly believe that the rally that has happened in the mid and small caps, which everyone is talking about, is actually the catch up for the last 10 years of underperformance, which the mid and small caps gave. So yeah, the re-rating, what we call in mid and small caps, have happened. And from here, we still believe that the mid and small caps would outperform the large caps when going forward for the next 2 years. And when it comes to the themes, one has to take a view of not 1 year, but maybe at least 3 years. Yes, so we are again bullish on, as I told you, themes like domestic capex, because the global scenario is in a turmoil, and we are very bullish on the public sector banks and railways, defense, infrastructure, and power is something that we are focusing on.
How about new age companies?
Yeah.
How about new age companies? Are you bullish on that as well? Because Paytm, Nykaa, or for that matter, now even Mamaearth, how closely are you tracking these companies?
So we are tracking these companies very closely, but we are not very, very bullish on them. Though we are impressed by the performance of Zomato. It's just Zomato and a little bit, I would say, Paytm. But yes, Mamaearth, we have not invested. Neither we are planning to invest. All the new age companies, I think we'll give them a couple of years to set in the competition to seep in, and then maybe since we are finding better opportunities elsewhere, we are not investing in the new age companies for now.
Okay, you've already put out the opportunities where you're looking at, perhaps. So we're just going to leave it at that. And thank you for taking out the time and speaking to us. And also happy Diwali well in advance to you from us, the entire Moneycontrol team.
Thank you, and happy Diwali to you and your viewers as well. Thanks a lot.
All right, pleasure. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.